Hello everyone, I am Dr. Soundararaj. I am happy to interact with you all through this video. In this video, I am going to explain the concept titled Fund Flow Analysis versus Cash Flow Analysis. These are all a few details related to my career. After you watch the full video, if you find the video beneficial to you, give a like to the video and do subscribe my channel so that you get the updates of the videos that I will be releasing in the future. Funds flow analysis versus cash flow analysis. The changes in the financial position of a firm can be analyzed either by funds flow analysis or cash flow analysis. Let us look into the differences between the two approaches. Number one, basis of preparation. Funds flow analysis is based on working capital concept of funds. Funds refers to working capital. So funds flow analysis is prepared based on the working capital concept. Whereas cash flow analysis is based on the concept of cash. That means cash concepts of funds. Regarding the second point of difference is basis of accounting. Funds flow analysis is based on the accrual accounting concept or accrual basis accounting. It is like the preparation of a trading profit and loss account. Whereas the cash flow statement or cash flow analysis is based on cash basis accounting. The third point of difference is in relation to cash inflows and outflows. Cash inflows and outflows are segregated or categorized into operating, investing and financing activities in cash flow statement. This is to facilitate the beneficiaries to understand how much amount of cash has taken inflow as well as outflow through the main operation of the business or through the investing activities of the business or through the third category named to be financing activities of business. Whereas if you look at the funds flow statement, the sources and application of funds are not classified into any category. They are grouped together and presented in the funds flow statement. Changes shown. That's a fourth point of difference. Funds flow analysis shows the various causes for change in the working capital over a period of time, usually the accounting period between two balance sheet dates. Whereas if you look at the cash flow analysis, it reveals the causes for change only in the cash position over the same accounting period. So funds flow analysis enables us to know the causes for changes in the overall working capital position of a firm. But if you take the cash flow analysis, it lets us know only the causes for changes in the cash position of a business enterprise. Fifth point of difference is usefulness. Funds flow analysis is more useful for decision making in the long run. Whereas if you refer cash flow analysis, it is useful only in the short run. It is a useful tool to make short-term financial decisions by a business enterprise. Regarding short-term solvency, that's the sixth point of difference. Cash flow analysis cannot clearly reveal the short-term solvency position of a firm. It can only be helpful in taking financial decisions in the short run, but it doesn't reflect upon the short-term solvency of a firm because it considers only cash and ignores other current assets and current liabilities of the business enterprise. In the case of funds flow analysis, it is a better indicator for short-term solvency because it considers the changes in all current assets and current liabilities and presents a more comprehensive position of a business enterprise in a given period of time. Seventh point of difference is interdependence. Working capital includes cash also, but the reverse is not correct. Thus, improvement in cash position automatically improves working capital also. Working capital may increase even if cash decreases. That is why he said the reverse is not true always. Eighth point of difference. Differences between the funds flow analysis and cash flow analysis based on the techniques of preparation of the statements. 1. Cash flow statement starts with opening cash and cash equivalents and ends with closing cash and cash equivalents. The very purpose of preparing cash flow statement is to know how the opening cash and cash equivalents balance has become the closing. What has happened in between the opening cash and cash equivalents and closing cash and cash equivalents. This is the real idea behind the preparation of a cash flow statement. But with more details of cash inflow and outflow in the name of operating activities, investing activities and financing activities. But whereas in the case of a funds flow statement, there is no such opening and closing balances considered. The second subpoint in eighth difference is funds from operations are ascertained and shown in funds flow statement. The funds from operations are further adjusted to ascertain cash from operating activities in the cash flow statement itself. The third subpoint under eighth difference is increase in current assets and decrease in current liabilities lead to increase in working capital. Because what is working capital? Excess of current assets over current liabilities is equal to working capital. Working capital increases when current asset increase. Working capital could increase when the current liability decreases as well. So this is possible with regard to the funds flow statement. But coming to the cash flow statement, this is not the case. Increase in current assets and decrease in current liabilities actually decrease cash. If you find the value of stock comes down, which is one of the current assets, you can understand that the stock is sold and cash has come in. So decrease in current asset leads to cash inflow. But whereas if you take the funds flow statement, decrease in current asset leads to decrease in working capital. The ninth point of difference is preparation of budgets. When budgetary control system is in operation in a business, cash flow analysis is very useful to estimate the cash receipts and payments and very useful for preparing the cash budget. Whereas with regard to funds flow statement, it is really useful for preparing the capital expenditure budget in a business organization. So in conclusion, cash flow analysis is more relevant for immediate short-term decisions of the management, whereas funds flow analysis is wider in scope and has more long-term utility. Thanks for watching this video. If you really like the video, give a like to the video. We will meet in the next video. Bye.